Hello and welcome to Geojit Spotlight. We are just days away from Union Budget 2026 and the air is thick with anticipation. With the market seeing significant volatility and investors looking for clear directions, everyone is asking the same question. Will this budget be the booster shot our portfolios need? To help us decode this expectation and strategies, we are joined today by Dr.V.K Vijayakumar, Chief Investment Strategist at Geojit Financial Services. Welcome, Doctor.
Thank you, Abhilash.
Dr. VK, last year, investors felt a bit of a sting when taxes on stock market profit were hiked. The current chatter is about the 1.2 lakh exemption limit for long-term gains. Is there any real hope that the finance minister will give us some relief this time, perhaps by pushing that limit to 2 lakhs?
Every year before the presentation of the budget, there will be demands to the finance minister from different sections of the society. The corporate sector will ask for corporate tax relief. Middle class income taxpayers will ask for income tax relief. Investors will ask for relief in capital gains tax, dividend tax, such other reliefs. That is very normal. But this year also there have been demands, particularly from the investor community. But I believe that it would be unrealistic to expect a major release from the finance minister in capital gains this year. Because last year the capital gains tax was raised marginally, long-term capital gains tax from 10% to 12.5%. But the exemption for long-term capital gains was raised from 1 lakh to 1.25 lakhs. A negative was that the short-term capital gains tax was increased to 20%. Always the government encourages long-term holdings of stocks. That's why we have a lower tax rate. But the long-term capital gains tax of 12.5% was introduced last year, not just for stocks, it is across all asset classes. Now you have this 12.5% long-term capital gains tax for stocks, equity mutual funds, hybrid mutual funds, real estate and gold. Only the holding period differs. So it is a simple, uniform tax system. And I don't think the finance minister will tinker with that just 1 year after introducing that. Well, there can be small changes, like for example, increasing the exemption limit from 1.25 lakhs to a higher level. That is possible, but it would be unrealistic to expect relief in capital gains tax. Also, it would be unrealistic to expect a relief from a personal income tax also, because last year, no one expected this kind of a major income tax relief from the finance minister. Now, up to 12 lakh annual income is free from income tax. So that means you are earning 1 lakh a month, you don't have to pay income tax, right? And we have to understand that this is a very fair tax, considering the fact that India's per capita income is only 2,40,000. So in a country where the per capita income is 2,40,000, the average income, even if you are earning 5 times that per capita income, you are not paying tax. Therefore, in that context, it would be unrealistic to expect further exemption in income. So don't expect a big relief in taxes, whether it is in capital gains tax or personal income tax. Also, from the macroeconomic angle, the government is facing a big challenge, because this year, financial year 26, the government is running short of its revenue target. The revenue target was around 47 lakh crores, but then it is estimated that the union government will fall short by 3 lakh crores because big relief has been given in GST. And the corporate tax collections also will not be as good as expected because the corporate profit growth has been lower than estimates. And also the government has this target of fiscal consolidation. Fiscal deficit has to be brought down to 4.4%, and for the coming year it has to be further reduced to 4.3 or even 4.2% possible. Under such circumstances, it would be unrealistic to expect a major tax reliefs If it comes, well and good, but it would be unrealistic to expect tax reliefs.
Dr. VK, defense, infrastructure, and renewable energy have been the superstars of the market recently. Do you think the government will keep its foot on the pedal with high spending in these areas? Specifically, should investors keep buying these stocks?
Well, during the last 3 years, 4 years to be more precise, the government has been doing the heavy lifting as far as capital expenditure is concerned. Capital expenditure is very important for achieving the desired gross fixed domestic capital formation, which is very important in determining economic growth. So we succeeded in achieving an average GDP growth rate of 8.1% from FY21 22 to FY25, 8.1%. Of course, it was enabled by the low base effect of the COVID year. But then this kind of growth could be achieved mainly because of the massive public expenditure of the government. And also we needed a big expenditure in defense, in railways, for the modernization of railways, and also for the modernization and growth of the defense sector. So massive investment was done in that sector. We can expect that trend to continue in this year also. Infrastructure spending, well, the kind of big spurt in capital expenditure that we witnessed in the 2024 budget is unlikely to be repeated because there are revenue constraints. But this trend of higher allocations for defense, railways, and other infrastructure projects will certainly continue. But from the investor's perspective, what is significant is what will be the details of the announcement by the finance minister. What are the details in which segment and which listed companies in the defense segment, in the shipbuilding segment, in the railway segment, other road segment, which companies will benefit out of that will depend on the details of the finance minister's budget allocation, which we do not know now.
So what's the outlook for banking sector? Are we looking at big reforms or fresh capital for public sector banks?
For banking, the government's policy is very clear. Government has declared very clearly the government's policy is to have a small number of large banks. So this is the age of large banks globally. You need large banks. From bank nationalization onwards, we were following a policy of course, there has been impressive growth in banking, but our policy has been a policy of large number of banks, and many of them therefore could not grow very fast. So we are moving away from large number of small banks to a small number, let us say 4 or 5 or 6. That is the ultimate goal of the government. So the present PSU banks will be merged. There will be some amalgamation and merger. The aim of the government is to have 4 or 5 or maximum 6 PSU banks. So we have the leading PSU banks like State Bank of India, Punjab National Bank, Bank of Baroda, then the Union Bank, Canara Bank, and we have weaker banks also like Indian Overseas Bank, Bank of Maharashtra, UCO Bank, Punjab and Sindh Bank. So the weaker banks will be merged with the stronger banks. That has already been announced, and the market has already responded to that. And that's why last year in 2025, even though Nifty delivered only 10% returns, the PSU banking index gave very impressive return. That was the best performing index in 2025. So that has been largely anticipated and discounted by the market. But the further market reaction will depend on which bank will be merged with which bank. Those details are yet to be announced.
Dr. VK, we are seeing new SEBI rules and higher taxes making life tougher for F&O traders. Do you think the government will introduce even stricter controls to curb speculation, or have you reached the ceiling for regulations?
Well, my view regarding F&O trades, speculation in the market is fairly well known to our investors and those who watch this video. I have been very consistently against F&O trade by retail traders and also speculative trading by, not even speculative trading, what we have been witnessing has been sort of gambling. All right. And retail investors are at a disadvantage. Yesterday, look at what happened yesterday. Yesterday, uh, in response to the positive news from Davos, when President Trump said, well, a forceful military conquest of Greenland, he went back on that, what is called the typical taco, Trump again chickens out. He went back on that. And also, he said there is a framework for a, a sort of a solution to the Greenland issue. The details are not known. A diplomatic solution is likely. And also, he said that a good deal with India is likely. Of course, he cannot be dependent upon because he is never consistent. He can say one thing today and totally different thing tomorrow. But then the market responded very positively to that. I think yesterday Sensex rallied by 838 points in the early morning trade. Big trade. A large number of stocks were rallied. And many retail investors, perhaps many retail traders also would have jumped onto the bandwagon. Then what happened then? Sensex ended with a gain of only 238 points. And intraday, it even went into the negative territory. Large players, they will be focusing on a particular stock. If a company comes out with very good results, yesterday, right? This morning, retail traders will jump onto that, they buy that, right? The smart institutional investors, the speculators, the F&O traders, large number of them who operate through the algorithmic system, they know this. And when the price really jumps up, they go short in that, and retail investors lose the money at the end of the day. This was why the SEBI report, SEBI generally as a regulatory institution is against retail traders doing this retail speculative trading, because the 2024 SEBI report very clearly said that 92% of retail traders are losing money. Only a small number of institutional algorithmic traders, most of them FIIs, are making money. They have the advantage. And there is even the manipulation which was evident from the Jane Street manipulation incident, into which an inquiry is going on. Therefore, the retail traders are at a disadvantage from the information angle. That is why 92% of them are trading. Therefore, any SEBI initiative, any regulatory initiative, even any taxation initiative from the government to restrict F&O trade, personally, I would welcome that, because I know not just 2 years, 3 years, 4 years post-COVID, the last 10 years, 20 years, 30 years, 40 years, speculators, vast majority of them, gamblers, vast majority of them, has been losing money. Long-term wealth creation happens when you make investment in good quality stocks, remain invested in them for a long period of time. That is how wealth creation happens.
So for the person watching this who is investing for the next 5 to 10 years, after the budget speech is over, should they be booking profits and sitting on cash, or is this the perfect time to start new investments?
Well, the people who are watching this video, our viewers, might be belonging to different age groups. I know there are people in their 20s, very youngsters in their 30s, persons in the 40s, and middle-aged guys in around 50 years of age, and very senior people above 70, even 80 years of age. I know a person who is 89 and a very active investor in Fiscal, right? So your approach to investment, what kind of investment you will do, what kind of risk appetite you have, will depend on your age, your income, your commitments, and all that. So for a young person, for a youngster, 20s, even 30s, even early 40s, well, there is no need to confuse about the investment strategy. That person should be investing in the long-term India growth story. I will repeat one point which I have made clear in the past also through our spotlight videos. Presently, India's GDP is around $4 trillion, about $4 trillion. We are the fourth largest economy in the world, likely to be the third largest, maybe in 2028. It is almost a consensus now that by 2032 or max by 2033, India will be an $8 trillion GDP economy with a market cap of close to $10 trillion. Because for a growing economy with big prospects, with a very deep and wide stock market, where you can invest in more than 6,000 stocks, well, market cap will be 125, 130, even can be 140, 50% of GDP. That's why I'm talking about this $8 trillion GDP and $10 trillion market cap in the next 6 or 7 years. That should be the guiding star, guiding investors, not what will happen in next month, what will happen to the market after the budget, during the budget, the week after the budget, what will happen to FII investment in July or August. Will FII start coming back to India and investing in India in 2026? That should not be the guiding star, guiding investors. For such investors, always, for all categories of investors, we suggest asset allocation. Asset allocation should be the basic principle of investment strategy. And we have been always telling investors to have a multi-asset investment strategy. And that multi-asset investment means your portfolio should have exposure to equity, that should be the maximum. It should have exposure to fixed income. It should have exposure to precious metals like gold and silver also, which has become very risky now because of the sharp appreciation. The reason why we are suggesting such a multi-asset investment strategy is, in the long run, equities alone can give wealth creation, incredible wealth creation. From 100 Sensex in 1979-80, we reached 85,000 recently. So it has multiplied how many times? 850 times. Gold has not given that kind of return, even though it has done exceedingly well during the last 2 years, right? So for long-term wealth creation, stocks. For income stability, fixed income, like bank deposits, bonds, bond investment, debentures, like that. And for hedge, to safeguard your investment as a hedge against uncertainty, precious metals. That should be the investment strategy.
Thank you, sir. Thank you very much.
Thank you, Adash.